Hey everybody, welcome back to Inside the Vault. It's been a little while since we did an episode. Today I'm speaking with a special guest named Chris Vermeulen. Chris works with Technical Traders and is a technical analyst and investor. I thought it would be really beneficial, especially given the recent price surge for precious metals, to bring Chris on and explain from a technical analysis point of view what is happening in the precious metals space and if we should expect more out of gold and silver in the coming months and potentially coming years. So we've had a lot of different guests on the show, a lot of different professionals from the industry, but we've never had a technical analyst. So I'm very excited to have Chris join us today inside the vault. Chris, welcome to Inside the Vault. We're very excited to have you with us here today. I wanted to start by asking you just to give us, in a nutshell, tell us what it is that you do at Technical Traders.
Sure. So at Technical Traders, we use technical analysis purely on the stock markets and asset classes like precious metals. So we don't look at any fundamental data. We don't look at PE ratios. We don't look at economic earnings or anything like that. Anything that comes out, we focus 100% on the charts. So whatever price is doing and the volume on the charts is telling us is where price is likely to go. So we're looking for chart patterns, momentum, when a trend is in place, something is more likely to continue to trend in that direction than it is to reverse. So we use pure technical analysis. We follow price. We follow it on multiple time frames. So you can get an early warning when it's starting to show signs of weakness. You can trim some gains off. It gets a little deeper. We can say, hey, let's trim some more off. So you can really gauge as a short-term trader, a swing trader, long-term investor, when you should be adding or trimming your positions in stocks and commodities in general. So using cycles and some other technical indicators, we can get a really good gauge of almost forecasting the future. Sometimes we can, but I mean, it's a tough gig.
Yeah, I know there are no crystal balls out there, but so in short, in a sense, you're removing all the emotional aspects of trading, which I know it can be challenging for anyone, especially precious metal buyers. They're so loyal to precious metals. And we tend to be an emotional bunch, I found over the years. So you remove all that and really focus on the data.
Yeah, I actually cut the news out about 6 or 7 years ago. I stopped listening to the news because it actually gets in the way. You hear about the stuff in the media, what's going on today, what's moving the markets. I mean, I really wake up in the morning and I do a video for subscribers every day. A little 8-minute video. I recap what happened yesterday, what's happened in overnight trading, and I can tell them and be updated myself in about an 8 or 10-minute window of what we're expecting for the whole day, what kind of volatility, where are the price targets, and we're really comfortable. There's really not going to be anything that's going to really surprise us. And whenever there is a big move, actually big moves are more predictable because there's more emotions involved in the market. And so the bigger the emotions, the more reliable the patterns become and the more power behind them. So there's some great opportunities in this market, and technical analysis just allow us to just filter out all the noise of news and just look at the chart. And in 5 seconds, you can pretty much know whether you want to own it, keep looking at it, or, forget about it for a while. So that's the nice thing about technical analysis.
Okay, great. So what were the charts telling you in the last few months? We had the COVID buildup, kind of starting in late February in through now the early summer months, and now we're into August. What were the charts telling you specific to precious metals during that time?
Right. Well, the setup there couldn't have really been much more perfect, to be honest. So we got long bonds in January. Bonds had broken out of a multi-month bull flag, which is a sign of meaning price should continue to go higher once it breaks a certain resistance level. So bonds broke out and we got long bonds. We were also long the SP 500. And bonds just kept on running higher and higher. And then precious metals, the gold miners, the GDXJ ETF, gave us a buy signal as well. So we got long the gold miners. And then we realized, okay, well, bonds are actually outperforming the stock market. So are gold miners. And we started to see the market breadth of the US stock market, meaning fewer stocks were moving up, even though the stock market was making new highs. We saw all kinds of other technicals like the volatility index drop, meaning there's no fear in the market. People are not afraid of a correction. The put-call ratio had dropped, meaning everyone's buying leverage to the upside. So when you get this perfect storm of safe havens moving up and outperforming equities, and then you see that there's no fear in the market, there's a real disconnect there. Well, who's buying all that safe haven assets? It's the smart money. They're moving in knowing something big and bad is coming. Yet the general public has no fear. They're buying leverage and just buying stocks, and they're just buying the big brand name stocks. So when we get a setup like that, you've got to know a correction is coming. And we knew one was coming. I thought we were going to have a 5% correction in the S&P 500. Ended up being 35. You never know how big something's going to be. The key is being prepared, moving into the assets. That's the best asset now, which is one of the strategies I use. I call it band, best asset now. So whichever one's outperforming, that's the one or the ones you want to own, because they're going to continue to outperform, and they're also going to hold up the best when the market corrects, generally. So we saw the metals start to move to the upside, and gold miners and gold both hit resistance the day that the market started to crash. And we actually sold our position at the opening bell at the high for GDXJ. Now that was that was a bit of luck in there, but it hit our target to the penny and we got out, and then it fell 56%. So these levels are, these technical levels do hold. They work exceptionally well, give or take a few percentage points here and there. But everything was screaming on the charts, prepare for a market correction, and everything sold off. I mean, we moved to cash, and the US dollar index was the only asset that rallied during that crash. It rallied 12%, the US dollar currency, which is amazing.
So since that crash, what's happened? I mean, because we saw the correction not only in the equities and also in the precious metals. It seemed like everything was going down for a while. But now there's been, I can speak for the precious metals anyways, because that's where my focus is, but we've seen an amazing rally for gold reaching all-time high in US dollars, and also silver now breaking out after 8 years of, laying completely dormant. So what most important question really is, and I guess this is what other viewers are really wondering, is what do the charts look like now? Because we've seen silver, I think, surging the last 8 or 10 trading sessions. It's up 3 to 4% a day, it seems. What are the indicators looking like right now in your world?
Yeah, silver we've had our eye on for a while. I mean, the March madness market crash was pretty scary. I mean, the big reason I think metals collapsed then as much as they did was because we had something new that the world has never seen, and we were actually afraid for our lives. People didn't care about what they owned in assets. They liquidated metals, stocks, everything, which is why everything collapsed. But now it's the perfect storm for precious metals. The worse the economy gets, the more bullish it is for metals, because there's going to be more stimulus, and the Fed's saying they're going to do whatever it takes. So the $21 an ounce US for silver was a major breakout level. That was the final straw that if we break 21, we're going to see huge short covering. We're going to see a massive wave of volume and buying. We're going to see a very strong pop. And that's exactly what we saw happen, and it has taken off. And so the upside for silver today, believe it or not, was our next target. And we actually pulled some money off the table today at 26.50 was our next resistance area for silver. And we'll just have to see where it goes from here. I mean, it keeps kind of stair-stepping its way up. This last run, it was a quick 12% gain in only 3 or 4 trading sessions tops. Very, very explosive moves. And now that precious metals are in a bull market, they tend to last for years. And so new breakouts to new highs after a consolidation. If something consolidates for a few days or a couple of weeks, the longer it consolidates, the bigger the move is going to be later. So we just had like a 5 or 6 day consolidation in silver, and now it broke and it's rallied and it's hit our next target. And now it's kind of like rinse, repeat as a short-term trader. As a long-term investor, you got to be long precious metals. You've got to own them here. Gold's been in a bull market for 13 months. So this is not new by any means. You should have been in over a year ago, really.
I like to tell people they should have been in 8 years ago.
Yeah.
That tends to be the case when it comes to precious metals. On a broader scale, you obviously have those investors that are very loyal to precious metals, and they probably put a lot more than their 10 or 20% in there. They're really parking a lot of their money in there.
Yeah.
But when you talk about mainstream investors, and I often refer to my mom and dad because they represent the perfect mainstream Canadian investor that watches the news and kind of listens to what their banker tells them to do. and it's not being disrespectful. That's just a representation of what how a lot of people behave.
Yeah.
I found.
Yeah.
I've been sitting down at the dinner table for years asking my parents to think about investing in precious metals. And I hear that question often from investors like, oh, it's, gold's up again. I'm probably too late. I'll wait for it to correct. And I'm like, this isn't crisis. This is when you should be accumulating. And now obviously we're into a different phase of, like you said, it's a bull market. I believe the same. And I think it will last for some time. So in terms of a time horizon, you said that these precious metal bull markets can last a time, and I know it's impossible for you to predict, but if you had to take, your best guess based on historical precious metal bull markets or what you're seeing again on your side of things, how long do you think we have? Is this something that might be a few months or maybe a few years?
Yeah, I think we're in a unique time. I mean, the average silver bull market is really the big strong rallies, they're only about 8 or 9 months long. They're not that long, but I mean, they pack a powerful punch. You're looking at 50, 100, 200% return more depending on the market or the bull market that it started. So I do feel as though this is a long-term game. I think gold and silver are in a new bull market. I do feel like if the U.S. equities market, which really, when the whole global stock market starts to correct in a bigger way and we potentially go into a bear market, we're going to see at least gold miners pull back. I think we'll see gold and silver pull back as well. I think what we're going to see is they've got this beautiful run up. I think we're going to see them flag sideways for potentially as long as almost the length of the bear market in stocks. And they're going to build this beautiful base. It would be a cup and handle pattern, which is actually one of the strongest patterns you can get, because the depth of the cup to the top of the handle, you can flip that up 3 times for potential upside gains. So there's a lot of potential. Perfect storm would be this market continues to rally, gold and silver move up another 10 or 20% from where they are here. And then the stock market tops and rolls over. And we see precious metals trade lower and sideways, give or take 20 or 30% for 6 or 8 or 12 months. Forms this massive year-long handle that goes perfectly in sync with an 8-year bear market basing formation. And then we see this unbelievable rally next year where fiscal stimulus either breaks and something's going to break eventually. And then we're going to see metals go ballistic. So I think next year is kind of the big move. I think this is kind of the precursor, like buckle up, something bad's coming. And it's going to get held down with, I think, a lot of global selling. There's going to be people liquidating funds because there's unemployment's rising. So anyone who's got gold could have to start drawing from it. There's going to be margin calls eventually, like in March. So I think the big picture is a year out for the big rally starting. But I mean, this is pretty fun and exciting right now, seeing these moves and the fact that we've started bull markets.
Yeah, it is exciting, definitely. I was speaking to an investor earlier today, and I said to him, it's really rewarding, and I feel good for these guys who have been so patient through, a pretty bad market. You did mention, gold has been rallying now for over a year, but the silver investors in particular have been kind of stuck in the mud, and to see them finally realizing these returns, and they tend to be people who invest in the mining stocks as well. So they're enjoying the moment, and It's nice to hear you say that moment is likely to continue. I wanted to ask you, that you touched on something important. I was reading on your website earlier, the BAN, this term they use, BAN, best asset now. Are there other good assets out there right now? Because we know precious metals is setting up well. I mean, that is pretty obvious, but are there other things that you're looking at right now as an opportunity?
I mean, the tech sector is still hot. It's really interesting because this whole crisis and pandemic has created this revolution, this working revolution is kind of what I'm calling it. I don't know what else to call it, but people have gone from going into offices and working 9 to 5 on the clock, commuting every day, to now everyone is staying at home. Companies are realizing, hey, we don't need the employees to come in, or we don't need all those employees anymore. So what we're seeing is this massive tooling of people's home spare bedrooms into offices. And so we're seeing this massive wave of purchases of new computers, technology services, and it just happens to be that the heaviest weighted companies, products and services in the stock market are technology. So everyone around the world is now retooling their homes so they can continue to live and work from home. And so it's creating this huge feeding frenzy of just a core group of technology stocks really lifting the market and biotech. And it's really masking what's going on. So people think, I mean, sales are amazing for technology and Netflix and stuff like that. But it's not that the economy is good that people are buying. People are buying them because they need their home office to look better. They need it to function as an office, as an interview room. I mean, everyone has to buy all this stuff. And once this revolution is caught up and the majority of bedrooms are now offices and tech has been bought, I think things are going to slow down. I mean, there's a lot of lagging sectors. So I like technology. I like precious metals. I like bonds. I mean, I mean, the rest is a very, very sector-driven market right now. And that is a clear sign that we are in the late stages of a bull market in equities, that the economy is weakening. When there's only a few sectors holding markets up and we see precious metals outperforming in bonds, it's never a good sign. So I think the precious metals really are the key play. And I think a good opportunity is to actually profit from a falling stock market. That's actually where, to me, some of the biggest gains are going to be made the quickest. Stock market falls 7 times faster than it rises. So in 1 year, it can wipe out 7 years worth of gains. Like, I mean, heck, it wiped out 35% in a couple of weeks, a year's worth of gains potentially, right? So if you can buy an inverse ETF, short the market, it's a very different strategy, very different game. It's not for the weak-hearted, but I mean, it is the weirdest feeling to watch the market fall 6% and you're making money hand over fist. And it does that for a month or two straight, or for a year straight, however long a bear market lasts, right?
So my last question, I know you wanted to talk a little bit more about the nuts and bolts of precious metals, and you had some questions for me, and I thought it'd be great. We'll take this opportunity to have a conversation about some things that people that are new to precious metals might not know, and some practical advice. We can do that in the second half. But my last question for you, Chris, is what you do for a living, technical analysis. Is it something that investors at home should be considering doing themselves, or is it best left to professionals like yourself? And be honest. I mean, please you don't have to sugarcoat the answer.
Yeah, it's tough. There's no doubt about it. I mean, I've done it since I was 16 years old. I started in high school, and then so I've done it longer than a majority of people in the market, majority of financial advisors. I've done the whole gauntlet. I've done stocks, I've done options, covered calls, currencies, futures. I mean, I'm the kind of guy, I went to school to become, I wanted to go to school for business so I could become a CEO. And I believe you got to learn every nut and bolt. You got to work on the floor, work your way up so you understand it. So I did the whole thing through the financial markets. I've traded, everything so I could figure out what my brain liked, what worked the best with my personality, the time frame, how much I want to work, how much risk I like. And so it all boils down to, I like things that move slow, like the ocean tide. And I like baskets of things like ETFs or commodities. I'm not so much into individual stocks trying to catch these hot moves that pop and drop quickly. I like something where I can move a large portion of my portfolio into a sector or an index ETF and just let it move up with technical analysis. And I like to do kind of swing trading / position trading. So they'll last anywhere from 3 days long to potentially a couple of months. So very kind of laid back, let the market trend do its thing, let it run its course. And so technical analysis to me has just become the key tool to do it. But I still learn every day. The market is always evolving. You can learn technical analysis in a weekend, but to really master it and actually get the experience, I mean, you need to put in a lot of years to do it. So to have some advice or follow someone, kind of like what I do, where you get to, I teach it and learn it every morning in the video. I explain why and how we draw these and what the patterns are. So you learn, and then you get to just play off the trades that I give out. So you get the best of both worlds. You get comfortable reading the charts. You know why we're in the chart. You know how many days out we're expecting this move to last. So it's a really comforting feeling using technical analysis because you actually feel like you know what you're doing or you know what's happening to some extent.
Okay, perfect. Well, thanks for that. I appreciate it. I think I personally speaking would rather leave it up to someone like yourself to guide me than try to take it on myself. there's like that old saying is just stick to the things you know best. And
Yeah.
I've realized that technical analysis is not a thing I know best. So I'll stick to the nuts and bolts of helping investors get their hands on some precious metals. We'll transition now into kind of the second part of what we had talked about earlier, which was helping, investors, maybe seasoned investors, but there's a lot of new people coming into precious metals right now. There's a lot of questions out there. We're seeing just a record number from SWP's standpoint, a record number of new account openings and people that don't seem, they're their first time buyers, that haven't purchased precious metals in a long time. So probably good to dedicate some time to answering some questions. I'll start by asking you one because I'm curious now that I know a little bit more about what you do and how you go about things. What's your strategy when you're accumulating precious metals? First of all, is it through an ETF? Is it through physical? And how do you structure your kind of purchasing strategy?
Right. So it's investing and trading, it's kind of like an onion. There's all kinds of layers in there. So, I mean, if you were to start at the big investing picture, I own physical metals in a third-party vault because that's long-term. I want it to sit there as a store of value. I look at gold as an insurance plan. Just like you buy insurance on your house, you get to buy gold. Nice thing is it holds its value, unlike insurance for a house is just money out the window every year. You buy this insurance plan in case there's a financial crisis. That small insurance plan of metals, if there is a crisis, should skyrocket in value. And if there is a financial crisis, your other assets are going to come down. So your home, your cash value, everything drops. And it should be dramatic to swing enough in precious metals when they do rally that, say if you got 10% of your wealth in precious metals, that 10% will go up potentially 5-6 times what it's worth, and your other earnings go down or your other assets, and it counters them. So at least you're kind of on that seeing eye to eye. I mean, the general basis you hear is have 5% in precious metals or 10% in precious metals. I think that's the bare minimum you should have so that hopefully when there's a crisis, you're still going to be eye to eye with how much net value you have, assets, liquidity. So I look at it as a big insurance plan long-term, physical only, outside the banks. When it comes to trading, more of a longer-term kind of investing position trading, I buy ETFs. That's my main thing. So I like to just buy the GDX ETF, which is the gold miners, and there's ones in the US, GLD, SLV. And so I do a mix, but my big holdings, my big capital is all physical metals outside the system. I think there's also a play between currencies. So I moved my money over into the US dollars a long time ago because the US dollar was rallying. And so not only are you buying ETFs in the US dollar, but the US dollar's had this incredible rally over the last year and a half, 2 years. So you're getting this value appreciation just by owning the US dollar. That might be coming to an end. We might want to get to the point where I move all my money back in the Canadian funds and I start trading Canadian ETFs that track gold, silver miners like the Sprott funds and things like that for that money. So there's a lot of levels in there on how you need to move around. So I do trade equities as the ETF kind of play.
Okay. Well, thanks. What do you want to know? I know you mentioned to me you might have some questions about precious metals. I'll do my best to answer those for you.
Sure. Yeah, I got a bunch of questions here from subscribers, and just because I want to know myself. So let's just start off really basic. What is the difference between minted bars and cast bars? Is there, for an investor buying it, what is the main difference there? Value-wise, does it change the price of a bar or resale value?
The difference between a minted product and a cast product is pretty subtle, to be honest. It's more of a physical appearance. It doesn't necessarily impact the premium that they're going to pay for the product. And if it does, it's really minor. It's like a fraction of a percent that it'll change the premium. But basically when you have a cast product, and I kind of tend to refer to that as the old school method, is they're basically melting down precious metals and then they're pouring it into a mold, and when it cools off, or it basically casts into this rough looking bar. They tend to use it for bars because the coins would just look kind of shabby. It would look like one of those ancient Greek coins. If you saw one, that'd be like what a cast coin would look like. They don't make those anymore because people probably wouldn't buy them. And so it looks pretty rough, and then they stamp that. And you have certain people that tend to like them because they look very natural and organic looking. But most investors these days are looking for minted products, which start their life cycle the same exact way, where it's melted precious metals, it's poured into a mold, but then that rougher bar is placed into a machine or a series of machines. There's an entire process involved in minting products. And it basically, the machine cuts off the edges, rounds out the edges, sands down the surface of the bar so that it looks really pristine. And each bar or coin that come out of that machine are identical. And that's really key. They want this kind of uniform, clean look so that when investors put their hands on minted products, they feel assured.
They see their fingerprint.
Yeah, exactly. But and it also allows the producer to integrate security technology. You have all these new anti-counterfeiting technologies that come into the market. It's really hard to do that when you have a cast product where the surface is a little bit wavy and not exactly equal. But with these minted products, they can actually engrave and micro-engrave these security features and stuff like that. And like I said, the investors typically are looking for more uniform products. So you see a lot more minted products on the market these days than cast.
Right. Okay. So stepping back, looking at investors who have small accounts versus, multi-million-dollar accounts, do you see a big difference between what, say, a $50,000 account holder versus somebody with multi-millions? Does the multi-million person buy big bars, or they still buy a ton of 1 ounce? I mean, where is there a shift in mindset between wealthy and the size of bars versus smaller accounts, or what do you see there?
Well, of course, my answer is going to be somewhat general, because you have, we deal with thousands of clients at this point, and there are all kinds of different scenarios. But I'll generalize a little bit. There's really two tendencies that I've noticed between kind of smaller investors and these larger investors. Typically, the larger investors, when they're coming in for $500,000, $1 million plus of precious metals, first thing I've noticed over the years is they tend to lean towards gold. Not to say that they don't invest in silver, but most of them will come in for large positions of gold. And that's because these people have accumulated a lot of wealth already. And like you hinted to earlier, really for them, it's a store of wealth. So if they have to choose between gold or silver, they're thinking, I want wealth preservation, wealth protection. And so I'm going to park my money in gold and let it sit in that third-party vault. And I really don't need an immediate return. I'm not looking for too much action. I just want it to appreciate over time. Right. Whereas with the smaller investors, they tend to be trying to build their wealth. So they focus on quicker returns. And so a lot of the smaller investors will look at silver as an opportunity, especially in a volatile market, to try to get a quicker return, in percentage terms back on their money. So there tends to be, more smaller investors buying silver. In terms of the products, I think it comes down to kind of functionality, and you do see the larger investors, and we try to guide them through this when they're purchasing, is they tend to go towards larger format bars because the premiums that they're paying for those bars are going to be lower. If you're investing in a 1 ounce coin, or you're buying a 1 ounce coin versus a 10 ounce bar, a kilo bar, even you can get into 400 ounce gold bars if you like, or larger silver bars, your premiums are going to be significantly lower for the larger bar formats. And I think the more savvy investors, or investors, who have spent a lifetime building their wealth, realize if I can save 1%, 2%, 3% on my premiums, that's a win. I can get more precious metals for my money. Yeah. And so they tend to buy those larger bars.
Yeah. Do you ever hear them talk about, I've done this, is I've got the whole gauntlet of kind of sizes. I've got some 1,000 ounce bars of silver. I've got a lot of kilos and 10 ounce bars. And then I've got boxes of silver rounds, 1 ounce silver rounds, simply because you never really know what's going to happen. I mean, if chaos hits, it'd be nice to have a bunch of silver rounds that you can actually carry with you. Not that I think we'll get there, but do you find a lot of people are concerned that they want small bits in case they need to use them in case currencies or banks close down, or you more kind of long-term people are not really thinking that far out, that crisis?
Yeah, I mean, I tend to fall into the same camp as you do. I don't think we're going to go back into a situation where, trading precious metals for milk or bread is going to happen. I'm not saying it's impossible. Anything could happen. I think we've all learned that lesson this year. But I think it's still a pretty unlikely scenario. The economy has evolved quite a bit, whereas gold and silver are not readily acceptable means of exchange anymore. So, and especially given what SWP does, we're really in the wealth preservation side of the business, where we're storing precious metals for people. Yeah. So our clients aren't coming to us asking us for fractional coins and small coins. They're really looking for, the best the best value, I guess you could say. So there is definitely an element of the market that prefers those smaller coins, and there is an argument to be made. But most of our clients, a little bit like what you explained for your own personal situation, have a variety of products. So if they did need to take delivery maybe of a monster box or two of silver coins or of 1 ounce gold coins, they can do that. But they also have these larger formats to save themselves some money. And if they want to liquidate, which is probably the most important thing, is thinking when it comes time to sell, or if I need to sell, how much money do I need? And you can kind of tie the product to that amount of money that you might need. So I had a client one time, I refer to him, I call him the cowboy. The cowboy had an expensive lifestyle, and he's like, Mark, I'm going to buy 10 ounce gold bars from you, and when I retire, I'm going to sell 1 10 ounce gold bar per month. And he had determined his lifestyle at the time cost him about $10,000 a month. Gold was cheaper back then. And so he bought a bunch of 10 ounce bars, and he would literally sell 1 per month. And so he had kind of done the math and worked out his exit strategy. So I think for investors, when they're picking those products, that exit strategy is actually quite important to give it a little bit of thought.
Yeah. Okay. And what about when it comes to brand names? Do you find there's companies out there with all kinds of different brand names, and these people that mint their own stuff with crazy crossbones and skulls and stuff? I mean, is there a big difference? Should we steer clear of certain types of, random branded stuff versus just the big names that you guys offer? I mean, you guys probably have a couple that are clear leaders that stand out that people trust the most. What are they?
Yeah, so the top 3 brands that we tend to sell to our clients are the Royal Canadian Mint. And we recommend the Royal Canadian Mint quite often, not because I'm a Canadian, but because in terms of premium versus recognition versus global liquidity, we think the Royal Canadian Mint is probably the best overall product available to investors. The US Mint is a close second. The US Mint is very popular amongst American investors especially, but their products tend to be higher cost in terms of premium because the US Mint charges more out of the front door than the Royal Canadian Mint does. And I think the third best-selling product overall right now, they've made big strides into the North American market as of late, are the PAMP Swiss products produced in Switzerland. Swiss gold, it's always hard to beat. They have such a great reputation. And so people tend to favor that Swiss gold product, the Lady Fortuna products. They also have some great anti-counterfeiting technology, and they're working now to integrate some of their technologies into the blockchain so you can see where the gold came from and things like that. So those are probably the top 3. But to answer your question, the things that investors really should be looking for are when you select a product are, does this brand name have good resale value, number 1? So when it comes time to sell this, how easy will it be to sell it? And also, what will people pay me for it? Because when you buy a product from the Royal Canadian Mint to the US Mint versus some skulls and bones coins that look cool, are kind of fun to have, there's a reality that when it comes time to sell, people are going to maybe pay you less for the skulls and bones, and they want that coin less or that bar less than they would something from the Royal Canadian Mint. And then on a larger scale, for the bigger investors who aren't necessarily selling a few $100s at a time when they're liquidating, $50,000, $500,000, $1 million worth of metal at a time. They want to make sure that those products are liquid on a global scale. So like if they're storing in Singapore, New Zealand, Cayman, New York, wherever that precious metals is being stored, they want to make sure that there's a buyer that has the capability to buy those products and that they want those products. So sticking to the best sellers is generally a good rule. The only exception that I've come across in my career is actually right now, where you're in a situation where the Royal Canadian Mint, the US Mint, they're all at reduced capacity and they're falling behind in the market. They can't fill the demand. So the premium on their products just keeps creeping up. And so those 100-ounce Royal Canadian Mint silver bars that are such an excellent buy usually for investors are actually so expensive right now that it's a better buy to buy the skulls and bones or the buffalo rounds or the generic rounds, because the premiums are significantly lower and you're getting smaller format products. So the total spread is actually tighter on those. So it's a little bit of like a reversal of logic, but it's just a really unique time.
So fill me in on, I'm really a newbie when it comes to actually physical metals. I just like to accumulate it. I like to buy bullion versus, minted stamped coins, just because I don't want to pay any extra premium possible. Just give me my gold and silver rounds. And but when it comes to assays, is there is that something that is important to have on your bars or your rounds or your pieces of gold? And does they have that for silver? Do they have it?
Yeah. So rule number one, and we mentioned this in our Inside the Vault videos, educational videos. Rule number one, when you're purchasing metal, is buy it from a reputable dealer. And rule number two, if you want to take that one step further, is buy it from a dealer who has a direct line to either the mint or the refinery that's producing the product, or has a direct line to a distributor of the mint or the producing refinery. That way you're going to eliminate a lot of the risk associated with counterfeiting, any kind of fakes, any kind of impure metal, because really what the assay is all about, the assay certificates or the proof of authenticity certificates, is they're trying to make you feel comfortable as an investor that the gold and silver that you purchased is real. And so if you go online right now and you were to do a Google search for a 1 ounce round, you're going to have just a huge volume of opportunities, different people you can buy from, including eBay, Alibaba, all these e-retailers. And unfortunately, some people make a living selling fakes on eBay and Alibaba, which is just, it's insane that can still happen in this day and age. And these e-retailers allow that to happen. But the point being, don't necessarily shop for the cheapest price or the best deal. Try to select a dealer that has those direct lines. And if you can get yourself the actual certificate of authenticity or products that come with these anti-counterfeiting technologies, that's again one step further in the right direction.
Right. Okay, cool. All right. Well, that's kind of the core of my questions, other than maybe one last one, which would be when gold and silver rally like they are right now, is this when you see the feeding frenzy? Is there a delay, or do you see buying happen in demand on your end before the price charts start to move, or is there the price charts move first and then you get a wave of people wanting to buy? What is the order that people are chasing prices, or are they front running it?
It's a really good question, actually. So I'd say the relatively few people that follow precious metals very closely are very much aware, like you would be, of when the trend is setting up, and they're buying almost in sync or before that volatile market takes place. But those are few and far between. That's like 2% of the population is really in tune with what's happening.
Yeah.
Most people that are still loyal to precious metals, they have some idea of what's happening. They own some gold miners. They have some gold or silver, so they're watching the price. They tend to react like 2 or 3 days after a spike. So I've noticed, like, the spike occurs and then you'll get the phone call 2 or 3 days later and they'll be like, wow, did you see what happened? And it's like, yeah, it's already happened. Now we're talking, and that's fine. And then you have the rest of the population, which is the large majority. Unfortunately, they wait for the newspaper or now, their news feed. And when gold becomes front page news, like it is now, it's like second page news, front page news, new record highs. Then everyone piles in and it's the frenzy. So to answer your question, we're seeing a frenzy right now. Volumes in the retail space in North America are at about 300 or 400% year over year in terms of new accounts, sales transactions. Right now, we're still seeing a majority of people accumulating, but we're also starting to see, interesting, that some people liquidating, especially silver. The last couple of trading sessions, these people that have been holding on to silver for a while, starting to take some profits like you did earlier, about $26, $27. People are starting to liquidate. So definitely frenzy mode. I don't think it's at the point where the mailman is buying precious metals yet, or my parents, for that matter, have not bought precious metals yet. But I do think that day is coming, like you said, probably within the next year or so.
Yeah, I remember I was in Florida on holidays at Christmas time, and Bitcoin ad on the radio and TV were like between every commercial. And I was like, oh my gosh, it was at $20,000. And I'm like, everyone in the resort where we stay was talking about it. And all kinds of people I grew up with, it's a timeshare, same people every year, we're all friends. They were all buying it. They're literally there buying it over their phone, just talking about it. They get excited and they buy more Bitcoin through some random ways with credit cards. I'm not a crypto guy, so I don't know how fully it's done, but it blew my mind. And we're starting to get it. We're not in that feeding frenzy for metals yet, but I guess once we get there, you got to give me a show when you've got this ridiculous frenzy.
Yeah.
We'll have to get in touch, because it's going to be a really amazing. There's what goes straight up usually pulls right back, at least a half of the move. So, we're starting to take off in metals. I think a little bit of selling here will be will be actually a good thing. The more they trade sideways here, because they've had a beautiful run, like 45, 50% in silver just in the last few weeks alone. I mean, they really do need a break, because when you look at the monthly chart, it's one big green bar, like beyond the norm. And usually the next monthly bar is a big red one. So, I mean, there's going to be some great opportunities to accumulate metals. So it'll be interesting once we get to that feeding frenzy, probably late next year is my thinking, but really exciting times for sure.
Well, Chris, I know for a fact we'll be talking again. I've actually really enjoyed, having a look inside of your world, the more technical approach to trading. It's quite fascinating. I know there's a lot more to talk about. I know there will be an opportunity to speak again about precious metals specifically, because like you said, there's still some legs in this market. So let's make a point to do this again. I think it would be beneficial for both of our viewers. And it's just a pleasure getting to know you, and I look forward to having you inside the vault. Maybe down in Cayman next time when we can do that.
I'd love to.
Yeah,
if travel's open, I would definitely come do that. But I got one more question. I know my followers are going to definitely want to know what's the core benefit? What do you provide as strategic wealth preservation? Like, I know you can buy metals. I naturally think you're in the Cayman Islands. It's going to be expensive to ship the metals back to mainland. Tell us kind of, how it works and, what you can do for them.
Sure. So SWP was founded back in 2014. It seems like it's a lot longer than that, but a relatively new company. Look, in terms of pricing and all the basic services that most precious metal dealers will offer you, we're very competitive. We have to compete, unfortunately. Being in Grand Cayman, we're not far from the US market, so we still have to compete with the American dealers. So we have to keep our prices relatively low, our premiums relatively low in order to compete with those guys. But the primary benefits of dealing with SWP, I think, are twofold. Number one is we are a boutique/niche business. So we are not a mass retailer. We get to know our clients quite well. We have a fairly bespoke service level. You have access to trained professionals, people that have been working in the precious metals industry for quite some time. So the level of customer service is quite high, I think. And that's one thing that when we survey our clients, the feedback is quite clear, that they very much enjoy the relationship that they have with us. And we try to educate them doing things like this as well, not just sell them products and push product down their throat all day long. But probably most importantly, and what's most unique about us, other than being in the Cayman Islands, is that because we're an offshore company and we still have great proximity to the North American market, which is our core market, is the fact that we don't have the same reporting requirements that a Canadian or a US dealer might have to either the local authorities or any foreign authorities. So the Cayman Islands has its own laws that govern the sale of precious metals and storage of precious metals, which are the two things that we do. And we have no reporting obligations to either the local government or tax authority or any foreign government or tax authority. So that doesn't mean that people don't have to pay their capital gains taxes. It doesn't mean that they're cheating the system, but what it does mean is that we can offer them a level of privacy that other companies can't. And I think in today's world, knowing or having a little bit of privacy is a really nice thing. Whereas most of your assets are, totally on the books and wide open to anyone's scrutiny, really. So I think that's one of the reasons our clients do tend to pick SWP, aside from us, being down in Cayman and they can come visit once in a while and scuba dive and things like that.
Cool. Oh, sounds good. Well, that was a great chat. And thanks for having me on the show.
Same, Chris. Thanks for interesting questions. I look forward to speaking to you again.
All right. Take care.
Take care.